Let me ask you a question. Have you ever heard the phrase quarterly estimated taxes? And immediately you tensed up, got a little nervous, like, oh, taxes, quarterly, estimated, all of that. Just a little uneasy feeling, huh? If so, you're not alone. And we are here to demystify quarterly estimated taxes. Welcome. I am Alan Pruitt, and I am the founder and CEO of the Therapist CPA. And this channel is for therapists in private practice who want fewer tax surprises and more clarity around their money without any overwhelm or shame. Welcome to day 8 of our 30 days of financial clarity for therapists. So, today I want to explain a little bit about quarterly estimated taxes in a way that actually makes sense to you, without using any accounting ease, as I like to call it. So here's the simplest way to think about it. Quarterly taxes are really just prepaying your tax bill throughout the year instead of having to pay it all at once. So think about this. When you were an employee, taxes were withheld out of your check every 2 weeks, and boom, didn't have to think about it, easy breezy. They gave you the money that was left over, right? So, but here's the beautiful thing about running your own private practice. Although there are no automatic withholdings, but look at this. When you are an employee, you make the money. Let's just say you have $100,000 salary, right? You have $100,000 salary. Then let's say they take out 20K in taxes, right? Throughout the year, automatically take out. You worry about that at the end of the year. There's 80K that's left. You get to spend that 80K on life, on all these different things, right? Flip that to the private practice side. Let's say you make 100K in private practice. Great. You're doing great. But then guess what? They don't take out taxes automatically. You get to spend eligible business expenses, whatever is reasonable, ordinary, and necessary. This is where the tax planning comes in. And then after you spend, then they tax you on what's left. That's why you want to have a strategic tax partner with you so that we can strategically spend business items completely legal and get you the lowest tax bill possible. But whatever that tax bill ends up being at the bottom, that is what you are breaking up into quarterly estimated taxes. And that's what you're doing. That's all it's doing is paying your taxes throughout the year because there's no automatic withholding. When you're W 2 automatically taken out, when you are a practice owner, they say, hey, your taxes are due in April, but we don't want to wait an entire year for you to pay your tax bill. So that's why we're going to break it up into quarters. And that's really all quarterly taxes are. So they're typically due 4 times a year: April, June, September, January, the 15th of each of those months. And so here's where a lot of therapists get stuck, though, is that they're told they need to pay quarterly taxes, but no one helps them understand how much, how to plan for it, how I should structure that, so on and so forth. So guess what? The payments end up being a complete guess. Maybe they're based off of last year, or like most of the therapists that come to us, they're just skipped entirely until you cannot avoid your tax bill anymore. And that's what builds the stress. That's what builds the anxiety. And this isn't in the private practice playbook. Well, it's in our private practice playbook, which let us know and we will get you a copy of it down in the comments below. But it is not in the typical playbook that you had in all of your schooling. So quarterly taxes are not about being perfect. They're about reducing your surprises. And so guess what? Even if you pay something, that is better than paying nothing and just hoping for the best and hoping you don't have a crazy tax bill. If you've been following us, remember I talked about a therapist of ours who, after we did everything, she had a great year. I think it's her second year in private practice. She owed $15,000. And that's due. And if you're doing your taxes in March, that's due in April. Well, imagine if you could have taken that and broken that up throughout the entire year. Proactive planning, that's what it's all about. So this is really just about starting simple. If you don't have a plan, that's okay. Set aside a percentage of everything that you receive. I'll give you something that most people don't give you either. I will tell you a percentage. If now, do note, I'm a CPA. We love our numbers. We love calculating things exactly. But this channel is about at least getting you in the right direction. Take 20%, bare minimum, if you want to be conservative. Or I guess this is more kind of midway. If you take 20% of what you make of your revenue, set that aside for quarterly taxes each month. If you've been following us, I previously told you need a second bank account, right? You need a bank account for these taxes to put tax money in to save it each and every month. Take 20% of what you earn, set that aside for taxes. That is the simplest way that I can give you. Everybody's tax rate is different depending on how much you make in your practice, depending on, all these different factors, but none of that is important on this channel. We do that. If you come do a therapist tea with us in a financial 360, we'll give you the exact number. But for right now, if you just need something, 20%, set that aside, paying taxes, and you would at least be in a pretty good spot as opposed to getting a completely surprise tax bill. So all these things here is also why it's important to have clean books, to know your numbers, to know your revenue, to know your expenses, because all of these things play into one another. And this is what helps you build a nice habit of saving for taxes as you go, so you don't get those huge surprises, because that's what builds stress. That's what builds anxiety as we get to tax season, because you just don't know. But if you're proactively planning, we are in a very, very good spot. So it's hard to quarterly tax plan if you don't know what your income is. And so that's what we're going to talk about as we go throughout the rest of this week. And we want you to make sure that you're paying your quarterly taxes, how to adjust them as needed when we need to, and just in general, how proactive planning can lower your stress and lower what you owe. The most important piece. That's the strategic tax planning piece of it. So if this explanation today helped you, please subscribe below, like, and then please, share this with a friend to help them do the exact same thing. And so if you want more help on building this, watch our full 30 days of financial clarity for therapists. Thanks again, y'all. Let us know if you have any comments below. Peace. Mind on the numbers.